Hello and welcome. Yesterday, the market ended the month with a significant correction as expected. Demand for risky assets increased and the quotes managed to pare early losses. However, the market's further direction is still unclear. Most likely, the euro-dollar pair will get stuck in a sideways channel. Alternatively, bulls may well try to push the price further up in order to hit new monthly highs earlier this month. In the best case scenario, the euro will suffer losses and then resume its bullish run. In this case, traders will have a chance of opening long positions at more favorable prices. Speaking of fundamental factors, yesterday's macroeconomic calendar included data on consumer prices in the euro area. Eurozone inflation topped all analyst forecasts and hit another record high. Obviously, the European Central Bank needs to adopt a more aggressive stance on monetary policy. However, this will lead to a more significant slowdown in the region's economic growth. The situation is rather challenging, thus it's difficult to predict the central bank's further steps. Some believe that gradual interest rate increases are needed. Others say that the regulator should raise interest rates by 50 basis points in July. However, most experts are sure that the ECB will take a cautious approach. As for the US Federal Reserve, there has been no news on a change on its further policy so far. Thus, the regulator is expected to stick to its previous plan on raising interest rates by half a percentage point at the next meeting. Today, traders may take notice of retail sales in Germany as well as data on business activity in manufacturing sectors of the euro area, Britain and Germany. In addition, the unemployment rate in the 19 countries sharing the euro will be released. However, this indicator is unlikely to have a severe impact on the quotes dynamics. A decline in the main manufacturing output growth in the euro area and its member state is expected to put additional pressure on the European currency. The focus of the market participants will be on ECB President Christine Lagarde's speech. Furthermore, traders should pay particular attention to the monthly ADP National Employment Report as well as the ISM's Index of National Factory Activity. Besides, some Fed and ECB members are set to speak today. So let's see the market and central bank's reaction to yesterday's data on higher inflation. From a technical point of view, I think it's worth focusing on the support level of 1.0690. A false breakout at this level will create a strong buy signal. The principal goal of bulls will be to regain control of the 1.0739 mark. If the price breaks through and consolidates about this level as well as tests it from the top down, the volume of long positions will increase. The euro-dollar pair will most likely return to 1.0784 and then approach 1.0811 and 1.0844. At these levels, it will be possible to go short on a rebound. However, I suppose the pair will hardly be able to reach them. Thus, a false breakout at 1.0784 or 1.0739 will create a strong sell signal. In this case, one can count on price fixation below 1.0619. If the price tested from the level up, bottom up, the euro will come under strong pressure and slide to 1.0646 and 1.0596. And the mark of 1.0596 I recommend going long on the rebound with a view to catching an intraday correction of 25-30 pips. Long positions at 1.06 1.46 can be considered only amid a false breakout. As for the British pound, the situation is similar. A false breakout at 1.2568 will lead to an increase in the volume of long positions. If the price rebounds to 1.2613 and consolidates about this level, an additional buy signal will be created. In this case, the pound-dollar pair will rise to 1.2655 and then head for the marks of 1.2709 and 1.2755. At these levels, traders will be able to go short on the rebound if the price forms a false breakout at 1.2613 or 1.2655. The pound sterling is expected to sink to 1.2568. Fixation below this level, its bottom-up test will further weigh on the British currency, which is likely to drop to 1.2526 and 1.2481. At this mark, it will be a wise decision to buy the pair on the rebound, counting on an intraday correction of 25-30 pips. Long positions at 1.2526 can be considered only in the event of a false breakout. Good luck.